MOG coin has been one of the best performers in all of crypto in the last month. The question is, can this current rally last? And if yes, how much higher could we go? Let's have a look at the on-chain metrics. Let's try to figure out who's buying and who's selling here. Let's look at the data most people are not considering. Now this month we are up 154%, but it seems like the rally is somewhat slowing down. In the last week, we went sideways. Now, this is not the first video on MOG coin on this channel. I've published several videos before. The very first one was published 438 days ago. And initially, it underperformed quite a bit, but then it started to catch up, becoming a slightly above average video. Now, the recent video is quite similar, as in it didn't really outperform, but it seems like it's catching up. It's probably going to be an outperformer in a few days. Now, where does this dynamic come from? It comes from search interest. So MOG coin is not necessarily a trending token. It's just a token that people do research on. And that research is due to the following reason. MOG coin is the second largest trending token on the Ethereum chain. It's got more than 15 million worth of liquidity. Now, there's not that much trading volume relative to the liquidity on chain. We've got 9,653 members in the Telegram channel, which is pretty much just automated messages. It's not really that interesting. Where we've got 134,000 followers on X, or formerly known as Twitter. And that then relates to only 53,000 holders on chain. So either the number of holders is inflated over here, and there are a lot of bot accounts here, or alternatively, not all of the holders of MOG are directly on the chain. We'll try to figure out what of those two scenarios is true by looking at the on-chain data in a second. So what we've got over here is the number of small retail investors on the left, medium-sized investors in the middle, and whales on the right. And the way we make this distinction is by looking at minimum holding thresholds. Now on the left, that's roughly 900 million tokens. So that's roughly $1,000 worth of the token. In the middle, it's $10,000. On the right, it's $100,000. Those are very long-term charts, so they start in July of 2023, and there's clearly been a change that happened at the end of last year. The number of all wallet cohorts went down. And so over time, we tend to see much more returning users than new users on any given day. So there seems to be a few arbitrage bots potentially that are trading as well. Here we've got the number of buyers and sellers over time. So that's now normalized to 100%. It seems to be relatively balanced. And here we've got the absolute number. So you can clearly see how MOG coin sometimes has more attention, sometimes a bit less. We did have quite a bit of attention 1 week ago, and that now tends to fade again. And so what's really driving the price of MOG right now is probably the bets. It's the derivative contracts, it's the perpetual futures. Because in the last 24 hours, we only saw 10 million worth of trading volume on Gate.io. And we don't even see any decentralized exchange here. But when we look at the perpetual futures, that's much higher. We had 38 million of trading volume on Binance alone. So it's the perpetual futures that drive the price. It's the same today. It has always been the case. So whenever there's more and more bets on the price, which is this green area, the spot price tends to follow as well and goes up. Whenever the market delevers, however, the price also tends to follow. And recently, we have seen again a spike in open interest, and that's currently what's fueling the price. The question is, will there be even more open interest in the future? If yes, probably spot will follow. If no, this might already be the peak in the price. Because again, there are no long-term spot holders that are still interested in MOG. The number of investors is not growing significantly. The price is going up because of short-term leverage through the perpetual futures. It is not going up organically, as in more and more people investing in the token. This is not a growing token. It's all just speculation, player versus player. A game of musical chairs. Whoever sells first gets the profit. And so there were quite a few sellers, but not necessarily voluntary sellers. So those are short liquidations. When the price of MOG went up, a lot of people got liquidated, and that's directly fee revenue for the centralized exchanges. So they are profiting from that volatility. Currently, the market seems to be a bit more balanced. There are no shorts that get liquidated, just a few longs. In theory, there might still be a bit of upside potential. The market cap is 400 million, and there are definitely larger meme coins out there. But once we reach the 1 billion mark, it does get quite tough. It's very competitive, and most of those tokens are quite old. They've been around for a while, and they're mainly held by the market makers. The only real exception is the official Trump token, but there was simply so much attention around the president of the United States launching a token, that of course did have an impact on market cap. But it's unlikely that MOG is going to flip the Trump token anytime soon. So we're not going to see a 10x anymore. We are at maximum seeing a 2x, maybe if you're lucky a 3x. Then would put MOG close to Fartcoin, which is also used a lot in perpetual futures trading right now. Now, after so many years in crypto, I think there's only two strategies to make money in this market. It's either trying to find altcoins very early, potentially using wallet tracking, buying things before the masses do. And while this is a strategy that can work, it's also comparatively risky. Things like Virtual Protocol or SPX 6900 went up massively this year. But if instead you bought Optimism or IMX or Polygon, you wouldn't have had such a nice time. Now with small bets, a few $100s here and there, the strategy does make sense. But for the vast majority of the portfolio, we have to take less risk. Now, the common narrative is that this less risky bet is simply Bitcoin. And while it's true that there's less risk in Bitcoin than in many altcoins, the price can still go down by 77%. So what can we do? I think the answer lies in taking advantage of crypto's market structure. Most altcoins underperform Bitcoin most of the time. So for example, have a look at this again, right? This is the performance of the top 100 cryptocurrencies in the last year. Again, SPX 6900 outperformed everything else. And here at the bottom, we see Bitcoin. So in the last year, Bitcoin appreciated by almost 72%. Now, how many altcoins outperformed Bitcoin? It's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. Out of 100 altcoins, 17 outperformed Bitcoin and all of the others underperformed. And so with a larger part of the portfolio, we can take advantage of this market structure. So instead of buying Bitcoin, we can buy this here. Now this is the exact same time frame that we see in those charts. And what we see here is again a Bitcoin chart, but it's slightly different. It's not Bitcoin relative to the US dollar, it's Bitcoin relative to Balancer. So what we are seeing here is Bitcoin's relative performance to one of the altcoins, an altcoin that tended to underperform over the long term. Now, why do we see that constant outperformance of Bitcoin over the alts? So it's not just that most altcoins underperform, it's also that the underperformance tends to be rather constant. The reason for this is tokenomics. It's an expanding token supply. Because that's how the venture capitalists and the members of the teams of all those projects make their money. They've got a vesting schedule. They get a token allocation, but they can't sell directly. They have to sell over time, and that depresses the price relative to Bitcoin. Yes, on bullish days, everything is going up. But when we zoom out a little bit, most altcoins are not doing as well as Bitcoin. Now, this is not common knowledge, but we can actually set up a position in a portfolio in a way that we make money when the relative performance of an asset versus another one is going up. So we don't have to bet on the crypto macro. We don't have to bet on Bitcoin going up or down. We can just make money when something outperforms or underperforms. Now, I've made several tutorials on that topic, how to profit from falling prices or gaining from relative valuations, or over here, how to win in bear markets by shorting altcoins. Now, it's not important what the macro is doing if we focus on the relative valuation. Again, the nice thing about the strategy is that it works in any market condition. At the bottom is again Bitcoin. Bitcoin has its massive crashes, and the largest retracement that we saw in this chart was maybe 50%, while the gain was much, much larger. So this is an 8,000% gain in relative valuation, while Bitcoin itself only made 100%. And so I'm of course sharing my own trades as well. Check this out. This is where I opened a short position, a relative short position on the Trump token. That was on April 30th. What we see here is Trump relative to Solana. Some community members entered the short as well. And then I closed the position a few days later for a gain of 142%. Now I actually shorted Trump twice, so this was an earlier trade. And again, here are a few other trades that our community members are making. So if we set this up right, if we've got risk management and hedging properly in place, there is real risk-adjusted alpha in positions like this. And so of course I shorted the Trump token again because of the tokenomics. Over time, the Trump supply increases. And it's really important to understand this concept. I believe that risk adjusted, if you want to make large bets, not just a small bet on the altcoins that might do 100x, if you want to bet a lot of money of our portfolio, then we have to bet on something that risk adjusted performs relatively consistently. So this is Trump in US dollars. And if you just bet on Trump going down, then when the market itself is appreciating, you've got a problem, right? Over this time frame, Trump did not go down. However, Solana relative to Trump went up. So that's the exact same time frame. That's a gain of 35%. So it's all about looking at what tends to do worse relative to something else over time. And how to set up those positions is explained in the videos over here. And so feel free to check it out. It's currently $125 per month. It used to be 165 at the peak of the bull run. Now attention is still relatively low, and so you can lock in the lower rate. I will not increase the rate for anybody that's already subscribed. Only the people that sign up when everything is hyped, they will get the higher price. But if you sign up now, you lock in that price. If it's your first time here, feel free to subscribe. I publish here regularly. A like would be very much appreciated as well. It helps the channel grow. Feel free to also check out Premium. Again, the link should be somewhere over here. You can just click on the link here. It should bring you to the website. And so yeah, see you next time on YouTube or see you in Premium. Cheers.